different story. Who's right, or could they both be right?
Right. Or what does that tell you about the world that we live in right now?
Talk about that coming up. Here's how we stand right now, though. The Dow has been flirting with the unchanged level the whole afternoon here. We're down 5 points, but it's like the weather in Denver. If you don't like it now, just wait. 30 minutes to change, so we'll see what happens here as we head toward the close. Any positive close if you have a new all-time high. NASDAQ is down 12 points right now. One of the big technology. And have you seen Twitter today?
Right, down 8%.
It's the fire
Must
out.
have had a problem.
Yeah,
They had plenty of time to get it
It
off.
only took a downgrade from Macquarie, so we're down
That's where that ice storm is going to be tough on it.
Keep an eye on that as we head toward the close. The S&P, that's got a point and change right now, trading at 1840. Let's get to our closing no exchange, start with our friends, see what they think of this market right now. Rich Peterson from S&P Capital IQ, Pete Fitzgerald from Money Express, Kim Forrest from Forrest Twp Capital Group, Kyle Harrington from Harrington Capital Management, and our own Rick Santelli. And Kyle Harrington, the note here says you feel, quote, this stock bubble is looking for a pin. 2 points. You think we're in a bubble? And number two, what do you think that pin might be?
Well, I'll tell you, I think we are definitely in a bubble, and pay attention to Main Street surveys, in my opinion. I think that the market is Fed inflated. I've talked to Rick Santelli historically about this, and I continue down this path. I think when institutional investors start to think about profits and start selling, I think we're in for a big sell-off in the first quarter.
At the same time, Kyle, we've had one of the most remarkable earnings rebounds that we've seen, so that supported the rally. And I guess to your point, if there's a bubble here, it has to mean what? That the multiple keeps rising even if earnings don't?
Well, I think has happened here is that corporate America has done a great job at trimming expenses to the point where a lot of human capital and a lot of excess expenses have been cut, and as a result, profits have looked fantastic. But there's only so much you can cut before you start to affect the top line, and I think this year, the first quarter, that's going to happen.
I guess actually we should go to Rick Santelli now. You found a kindred spirit here in San Diego. Explain that. And then on this day when we did get the 3.01% on the 10-year.
Yeah, still haven't closed with a 3% handle. We'll have to wait and see. But, you know, I like what he said, especially about the pin. I just hope that they're not going to find that pin number from Target. What I would think is that, generally speaking, you can see in just simple areas that risk is just underpriced, and it's a lot of the same scenario that we saw before the tech wreck or even before 2008 Great Recession. Just look at HYG ETF, virtually unchanged on the year. High yield spreads are tighter than they were at the end of last year. Not true for investment grade. That speaks volumes. I continue to say that 6 months before the tech wreck, we almost doubled before it ultimately happened. I don't disagree with Kyle at all, but I will be remiss if I'm going to go out and tell anybody to sell stocks, because it's more about timing than whether it's about if. And I think it will have a big correction, and I think the porthole for all the smart people who think they can dance between the raindrops is going to be dicey. But I don't know that until the
Is there
imminent
another one
condition.
before Vienna?
That sounds, Kim, it sounds exactly like a phrase that's becoming more popular around here. It's called fully invested bears. People who are fully invested in this market hating it the whole way. Does that sound familiar to you?
Yeah, I mean, I go that way.
Oh, absolutely. Go ahead.
Kim Forrest.
Oh, I'm sorry. You were talking to me, right?
Yep.
Okay. Yes, I think it does sound exactly like the fully invested bear. Maybe I'm one of them, but I think what I've really trained myself to do is look at individual stocks as opposed to the market overall. And I'm always on the lookout for something that I consider underpriced. And it's tough, but you can find them every once in a while.
And you think technology is, right?
I think technology is for a lot of reasons. There's a lot of stocks that people have thrown on the trash bin right now for one reason or another. Some of them good reasons, some of them not. But here's the thing about technology. Productivity never goes out of style. And technology is about the only thing that can give us that. That's why I'm always keeping an eye out for tech stocks. Kim, tell us what stocks you like here, because I got to imagine a name like Twitter isn't the top of your list, or is it? No, I can't really see that that's all that productive, but we'll see in time. Now, I really concentrate on the enterprise names, and to us, Intel still is very much an enterprise name, especially as PCs are not going out of fashion in the office. I still use them to create content. I'm sure you guys do. And then there's a smaller company called CA. They used to be Computer Associates. They sell mostly mainframe software, but we think they're an interesting turnaround play at this point.
Keith Fitzgerald, we should have had you yesterday when Twitter was up another 8 or 9%. Now it's down 8%. So sure, it's easy to say you're shorting Twitter at these levels here, but you are, right?
Yeah, Twitter schmitter. I think this whole thing's been overrun since the beginning. It's, you know, it's a bubble. It inserts a windshield, a bug inserts a tire. You know, I don't know what moniker you want to put on it, but the company's not making money, and the next best thing is a click away, and social media is totally overblown. So I'd love to short this stock in at these levels.
You can see behind you.
How much lower could it go, do you think?
You know, I think $40 is probably about right, because that's what the warrant said on the IPO is the approximate value a year out. You know, so I think that's what we're looking for as a first stop. But, you know, I really don't think the stock's worth more than about $10 a few years from now, frankly.
Keith, is it because of how your fund's structured that you're not shorting it? Why not then jump in at these levels if you think it's that compelling?
Well, because we don't have an awful lot of activity today, so I don't like to get in where the markets are thin and I don't have a good spread in liquidity. I want to see what's happening that first week or two, because I think there's a lot of euphoria. There's still going to be a lot of piling on from the retail trader, and as an institutional trader, for me, that's the volume I want to see, because it gives me the liquidity I need. Without the Fed, we're 25% lower, and that's going to be the momentum I want.
25% lower?
Yeah,
You're talking about 25% lower in Twitter or in the indexes generally without the Fed?
Indexes in general. The Fed's going to do everything they can. It's like rearranging the deck chairs on the Titanic. Cost cutting is not a growth strategy. I don't care what portion of corporate America is going to try to pull this out, and at some point in time it's going to give. So we haven't had a pullback in December. I'm looking for that into January, but after that I think they're going to throw everything but the kitchen sink back into the mix, and here we go again.
All right. Well, Rich Peterson, what are you going to be buying from Keith and Kyle? They both are looking for that big pullback.
Well, Bill, I think, you know, investors will be remiss not to be in equities. The fact that they should be aware of some key metrics. First of all, you look at December. Since 1990, 70% of the time where there's been a positive December, January has also been positive. That's point one. You know, point two, the fact that we had the best year for the S&P 500, up 29% since 1997. That following year, 1998, the S&P is up 26%. So one good year often follows another good year. The third thing is earnings. The fact is we're going to still see a positive earnings gap for 2014. The fact that we're looking for $120 per share on the S&P 500. The current valuation is at 15.4 times a forward multiple. In fact, while stocks are not cheap, they're still not expensive.
Wait, the tech sector is getting a little expensive. We were talking about this yesterday.
I saw you
say has really jumped there. Does that set off any alarm bells?
Well, I think for protecting, also the fact that you look at cash on the balance sheet. Back in 2002, cash on the balance sheet for the S&P 500 technology sector was under $200 billion. Now it's over $630 billion. There's a lot of cash there, so activist shareholders are plowing into those shares. Activist shareholders hold about $38 billion. S&P 500 technology companies compared to about $22 billion a year ago this time. So that's a positive sign in our camp.
Kyle Harrington, aren't you getting sweaty palms? I mean, according to Rich Peterson, history is on the bull side right now. A good year usually follows a great year like we've had here.
Reaping pines everywhere.
I think you need to take a look at if in that good year the Fed is as involved as it's been in the past year, and I would say I'd say no. Bonds, I would stay away from bonds. There's no yield, and I think that rates have nowhere to go up. Bond prices will go down. It is true that the only place really to try and get outsized returns is in the United States equity markets, but I would look at valuation very closely.
You just made a pretty good case there for equity.
Because it won't stop.
No, I think you need to be in the equities market. All I'm suggesting is that this market, in my opinion, is Fed inflated, overvalued. Be careful. Look at individual securities and funds that are very well positioned in sectors and in valuation. Pay very close attention. Stay close to your trusted financial advisor.
All right.
Hey,
well,
Kyle, one more point.
Go ahead, Rick.
If you think stocks are going to move a lot lower, then treasuries at some point do become a buy.
Okay.
Yeah, I mean, yeah, at some point they do, Rick. But I just think that the yield there, you know, is not tremendous. The only natural hedge to the only crap game in town, and we got to keep that in mind.
Exactly.
What's the biggest crap game in town?
Thanks, gang. Appreciate it very much.
Thank you.
Have a good weekend and a good New Year as well. Heading toward the close, about 50 minutes left in the trading session here. The Dow's down 6 points. We're not panicking yet.
Yeah, the S&P 500 is barely lower, and we're talking
Down
about
6
record levels.
points.
We're also talking about
Well, they're looking for
2013 has been a huge year also for IPOs. Well, next year,
huge
bringing
year-end
which operations
close
could rival the success of, say, Twitter,
week.
Potbelly,
They
and
only
other
got
hot
a day and a
news.
half.
That's the segment coming up.
Yeah, we have potentially the biggest IPO ever coming up next year. We'll talk about that. Also, American Express shares
32.
have made big gains for the Dow this year, but can this stock keep charging high? You get that? Both sides of that debate. We have a stock fall on American Express coming up.
Also, Amazon, UPS, and FedEx are in damage control mode after failing to deliver all their gifts and packages by Christmas. Now, Target admitting debit card PIN numbers were stolen. We want to know what you think those companies should do to make it up to disappointed customers. Your best tweets on this at CNBC Closing Bell coming up. You are watching CNBC First in Business Worldwide.
This might get a little weird.
Grammy-winning Christian music icon Michael W. Smith has recorded 3 albums of Christmas music and brought it on tour countless times over. Now, once again, he's bringing Christmas to Sirius XM.
Cheap land or relatives
music with lots of help from artists like Amy Grant and Mercy Me. I'm Michael W. Smith. Would you please join me and my friends for the 5th annual Message Christmas? Hear an encore presentation on Sirius XM On Demand, online, and on the Sirius XM app. Merry Christmas.
CNBC, the recognized world leader in business news. Sirius XM 112, and on the Sirius XM app for smartphones.
Do you own the right stocks? Do you know what your stocks are really worth? VectorVest analyzes, sorts, ranks, and graphs 8,000 stocks every day for value, safety, and timing. VectorVest can give you buy, sell, or hold recommendations on every stock every day. Nobody cares about your money as much as you do, so take control of your portfolio, and VectorVest will show you how. Google VectorVest or visit VectorVest.com to receive your free stock analysis report. Before you invest, check VectorVest.
Shiawassee County did declare
I believe I can do anything. So when it came to learning a new language, I knew I had to do it the way I learn. No books, no memorizing or translating. I wanted to learn the same way I learned my first language, naturally. That's why I chose Rosetta Stone.
Rosetta Stone invites you to be a part of its biggest language learning event in history. Because this year, we want to help 3 million people learn a new language. That's why we're going to give you an absolutely free demo of our language immersion technology. To participate in this free nationwide event, just call 1-800-597-6378.
Si yo puedo hacerlo, usted puede hacerlo. If I can do it, you can do it.
To participate in this free nationwide event, call now for your free demo from Rosetta Stone. Call 1-800-597-6378. That's 1-800-597-6378.
With 11 grams of fiber and 7 grams of protein, all-natural Barn Dad's Fiber DX manages hunger and a healthy digestive system for proper weight management. Baking with Barn Dad's assures a 44% of daily recommended fiber. The fans will love Barn Dad's German chocolate shake, rich in fiber and protein. Look for Barn Dad's Fiber DX in the dietary section, CNC, Vitamin Shop, Walgreens, and Giant Eagle. Receive a free sample at barndadsfiberdx.com. Where Wall Street and Washington come together. Join Larry Kudlow for the Kudlow Report. Weekdays 7 p.m. Eastern. CNBC Sirius XM 112.
Welcome back. Well, it's been a big year for IPOs, and that could carry over into 2014 because of a potential flood of Chinese companies in particular that could list on U.S. exchanges. Didn't go last time around, but a better environment now. SEMA appears to be supporting demand for these deals, does it not?
That's right, Kelly. You know, there's a couple different factors that could help boost the number of Chinese IPOs in 2014. First, American investors seem to have regained their confidence in Chinese IPOs after what was a 7-month drought, which seemed to be due to questionable accounting practices at several Chinese firms. Second is the stellar performance of Chinese IPOs this year. Suzy Mobile, Chunar came in, Montage Tech up on average 70% this year, while 500.com is up better than 160%. NASDAQ Senior Vice President of New Listings, Nelson Griggs, told me we could see upwards of a dozen Chinese companies list next year if investor sentiment and the strong market continue in early 2014. Now, Griggs expects the Chinese IPO pipeline to be primarily in the on-demand software and IT space, with focus on companies that are trying to capitalize on China's 500 million internet users. Similar to what Chinese internet players Baidu, Sina, and Youku have
been real
focused on.
noisy when it
All
was
these
raining
companies,
out here.
all these names are up double digits this year as investors are more confident in these companies' ability to penetrate China's internet base and have become less wary of investing in Chinese players. With that said, there are still skeptics out there who say transparency and accounting practices of Chinese companies is a concern. Kelly and Bill?
All right, Seema, thank you very much. So with public offerings from names ranging from Twitter to Hilton Hotels to Potbelly in 2013, activity reached its highest level in the IPO market since 2000.
Yeah, exactly. And with stock prices at record highs, some are wondering if the IPO market is running out of road, while others contesting the trend should continue. Joining me now with their takes are Gene Erkin, Managing Director at Hello Group, and Jimmy Mangle, who's editor of Wealth Daily. Guys, thanks for being here.
Thanks for having me.
And so, Gene, do you think 2014 is a year where the IPO market heats up even more?
I do, yeah. Since 2012, we've seen confidence building. With volatility down and the equity markets up, we're seeing transactions priced at or above expectations, which make it a healthy alternative to private deals. In addition, you have financial sponsors who are, funding these deals, remain very active and aggressive. And at the end of the day, it really comes down to the equity market's willingness to assume the risk, and right now they are.
Jimmy, you're saying that 2014 will be a good year for technology IPOs. Who you got in mind? How good are we talking?
I pretty much think as long as we're riding this bed-drunk market, IPOs should be hot in 2014.
To see the power lines.
We're talking about the